Let's talk about Apple getting bitten today. Goldman Sachs cut its price target to $165 from $185. The firm saying Apple's plan to dole out a free trial for Apple TV Plus subscribers will have for Apple TV Plus to subscribers will have a negative impact on selling prices. Apple responding today saying they do not expect any impact on results. Gentlemen, what do we think here? Who would like to take a whack at a bite of the apple?
I'll take a small bite, but I think it's a big enough apple for everybody, Dan. So we have a case here where I think Goldman also tried to talk about the accounting of services versus hardware and really say, hey, you know what? This isn't going to be as services friendly as you want. And they tried to, I think it was a very interesting exercise. That alone is not stopping the move to services. That alone is not stopping the re-rating in Apple stock. Whether, Apple Plus as a preloaded service for people for a year is actually a way to get them hooked on the service remains to be seen. But there's no question that they are going to be able to get better use of the 1.5 billion installed base than they ever have.
Yeah, listen, it is an accounting thing that they're talking about here, but there's something else on the hardware front to be worried about. Apple units, iPhone units are not growing anymore, right? So services growth is somewhat dependent on that installed base growing. So if you start seeing ASPs come down, that likely means that you're going to see gross margins come down, and that's the hardware business that's still 60-some% of their overall sales. It's important. So if you're just going to be lumping in these sales on the services on this installed base, you might not get the multiple that you're hoping on the services business, because if it's just being bundled in there, because who knows what the attach rates are going to be after the 1 year free trial.
1.5 billion people that aren't going anywhere. By the way, how about hardware as a recurring service? That's what.
Well, I love the upgrade program, and I think Apple Prime is coming to a theater near you in 2020, and that's probably a bigger part of the story, how you bundle it all together.
I think the accounting gets a little cloudy for me. So when you look at Goldman's accounting of it, I think that they're trying to be provocative, maybe in its essence of the call. But when you look at the technicals on Apple, people have bet against it so readily, and now it's breaking out on a technical level. If we can overtake that 233 mark, the stock is off to the races.
We love news, and we just got some, and it is that Bob Iger of Disney has resigned now from the Apple board. Obviously, these two companies have had a lot in common over the years. With Pixar and Steve Jobs and so forth, but now they are competitors.
Yeah, look, they clearly are both going right at the over-the-top in the streaming business. It's hard to know what something like this means. Bob Iger's a busy guy. I don't, and I would say that on some level, it doesn't make a ton of sense that he's. Look, Apple's a media company too, and we talked hardware, we talked services, media. So I'm going to read it that way.
Yeah, maybe a little bit of conflict of interest there. Yeah. Ultimately, I don't think it has a huge impact on the stock. If you look at Apple stock, it's held the 50-day moving average 18 times. It's not overly expensive, so it's a long-term story.
It's a validation of Apple's business model, isn't it?
Exactly.
If he's that worried.
So I think you still hold it here. I think you might have to be a little bit patient with the stock in the near term. Obviously, its third biggest market is China. iPhone sales were down 14% there in the second quarter. So, maybe some near-term chopping, but you hold it for the long term.
Any thought on Apple, Dan, here? Would you like it?
I think you'll probably see new highs, but China is the issue. And I got to tell you, I think the stuff with Huawei and Apple are very related. So.